really, at the end of the day, it's just a matter of a macro market. It's just what happens.
That's why it's really important to have a plan. Have a plan and understand what your goals are.
In fact, my camel out there is suffering right now with a broken back.
So I actually found Pepe when it was only a couple of hours old, and I'm like, oh, this is a funny meme.
Oh my god.
Yo! Who is this DJ?
The old man is swing trading over years at a time. And it's like, that's where the real money is made.
The answer is a permanent loss. With single-sided staking, you don't have to worry about impermanent loss.
If you're aware, if you're disciplined, you can hone that into further financial growth.
Financial freedom, so where you can actually live life and not have to be constantly living paycheck to paycheck. I mean, that's the ultimate goal, more or less, right?
And we are live. Welcome back to another episode of the DGen Roundtable, episode number 35 on our Sunday night episode show. That doesn't include all of the book clubs that we bring you. That doesn't include our Whiskey Wednesday streams, our special guests, some deep dive videos with some creators within the different ecosystems of Pulse Chain and other chains. So we've brought a lot of content over the last 9 months, and we're excited to bring you more. As this bull market continues to run and ramp up, we don't want you to fumble your bags, okay? Don't listen to all of these outside noises. Make sure that you stick to your plan and only adjust it if new information comes out that makes you need to reassess what you're doing. Other than that, keep your eyes focused and stay on top of it as we move this bull run into the next level. I'm excited. I think we have some really bullish news. I think we have a really great show lined up for you. Great panel. We got a full show tonight, which is very exciting. Zenith, my co-host, Nate, Will, Josh, great to have you all in the house. You know, I feel like Michael Saylor a little bit. I'm so fucking bullish right now on Bitcoin over the next year. And, you know, anything can happen. Anything can change. But I'm excited to talk about it. So I'm here. And I'm here with my buddies. And Zenith, how you doing, bud?
Doing well. I mean, I hope everyone is recovering all right after this Bitcoin halving, where, as we all know, the halving is where we all lose half of our Bitcoin. So now we just got to rebuild from the halfway point. That's how that works, right?
Sounds right. Sounds right.
No, I am very excited to be on the stream with all the boys tonight. We have, I mean, personally, I'm having a bit of like halving, like depression, which is I don't really know what our next macro event is for news-wise, because it feels like for a long time we were looking at the Ethereum fork. That happened. Now we've had the Bitcoin halving. So what's next? It's like, honestly, anything that the SEC creates or manufactures, or just waiting for the top of the bull market. I mean, or I guess Ethereum could theoretically get its gas fees under control, but I'm not going to hold my breath on that one for a hot minute.
Presidential election.
I think we got a few.
That's right.
I think we got a few scenarios, though. I mean, look, there's still in the background potential ETH ETF happening. We still have, like Nate said, elections. Hong Kong's launching a Bitcoin and Ethereum ETF.
Rate cuts.
And that's not happening.
Lack of rate cuts. So that is
Lack
on the
of rate
docket
cuts
for tonight.
Might get into. But yeah, honestly, I know what you're saying from a Bitcoin standpoint. The narratives are kind of like being checked off, but not in a bad way, in a really good way, right? Everything is sort of building a foundation for us to continue to move forward in the bull market. Now, like you said, Zenith, for a few months we might not have as much, and so that might create some crabbing. It might create some, you know, what could be people are like, oh, I thought we were in a bull run, but don't forget that there's always times of either pullbacks, contractions, and potentially crabbing sideways, and that's healthy for the market. So maybe we need that. Maybe we need some no news currently for a couple of months.
Could be useful, that's for sure. I guess I forgot that we do have some stuff coming up, but it's honestly a lot of like traditional finance driven or traditional, I guess, like news events. It's not really that like crypto specific stuff, which is like the halving, the ETH fork or whatever. So yeah,
we saw a couple of lawsuits out there. So, you know, every time the SEC takes an L, that's it's good for crypto.
Good day for everyone. Yeah.
Nate, how you doing, man? How's the frozen tundra up north? You guys all thawed out?
Oh yeah, we're well thought out. Now things are starting to get really warm. Yay! Actually, it was weird because the last 2 days it was snowing,
after we were in the 60s just a couple of days before. So it's like, okay, I don't get this, but yeah, no, I'm hanging out and having a good time. This weekend has been a lot of just kind of like relaxing and just kind of doing whatever for me, which is nice. I'm trying to work right now on moving into Phantom Opera, like the network, trying to get people from over there interested in our show. And what I'm trying to do for this Wednesday is get somebody on from there, but I don't think it's going to be this Wednesday. So it'll probably be the next special guest. But yeah, I'm just kind of pulling strings right now, trying to see where I can, if I can't happen to get somebody.
Yeah, I've been talking to a few content creators within the Pulse Chain space, and I may have a special guest line coming up for one of these whiskey guest streams in the near future. I've kind of been doing more research into a project that's called Fothmon, $Fothmon or 404mon. It's essentially like a Pokemon style 404 NFT project. So it's kind of cool. I invested in it very early on, not really expecting much of it. But I'm starting to see some real interest, and I think that it could be a project for people to look into and to consider. It's really cool. And it's still cheap, so that's something that could be on the docket moving forward. But I just love all of the people building within the space. It's great to see. Will, where are you driving? What's up, man?
I have pulled over. I'm on Interstate 70 right now, headed to Columbia, Missouri. So that's what I'm doing. I got some climbing training that I need to go do for to remain certified as a tower guy. So I'm about to be occupied doing that for the next week. But hey, if anyone who's watching here is nearby Columbia, Missouri, then hit me up and I'll swing on over and say hello. Till then, I'm going to be hanging out with my Marine Corps buddy over in the city. So yeah, I am enjoying this this Halving piece, or this post Halving piece that's happening, and just looking at the price action and seeing that Pulse Chain still got a lot of stuff that's in the buy zone. So I'm happy for that to extend out for as long as possible, so I can get in as many DCAs as physically possible. But yeah, doing good, man. Happy to be here, ready to get into it.
And last but not least, the man with the shades. What is up?
What is going on, fellas? Hey, I just got back from a little road trip. I took a trip down this weekend for a little 3-day weekend down to Virginia, spend time with my little brother down there, took my daughter down, and came back and realized that Bitcoin had halved. And I was like, okay, here we go. It's like the start of a vacation. It's time to enjoy the ride until it's over with. So excited to be on the show, excited to discuss what the next 6 months to a year is going to look like and be a part of the convo.
I love it. So let's hop into it. Bitcoin halving is an interesting time. I think this is a cycle that's really different from previous cycles. We haven't had that many cycles, right? We've had essentially three cycles. This is our fourth Bitcoin cycle. And
you went on mute.
Okay, thank you. Keep in mind that we're using limited, historical data. There's only been 3 cycles before this one. And so for us to think that the fourth cycle is going to exactly match the previous cycles, we need to be a little bit weary of that. But so far, so good. Everything has been, in my opinion, to the T. The only difference is we reached a higher high before the halving, which has never been done before. But it's also a unique cycle because we have institutional money coming in. We have countries buying Bitcoin. We have the country of MicroStrategies buying Bitcoin. And it's just all of this big player money coming into the system. And I think that's something that people aren't always taking into consideration. I've seen a lot of Twitter posts recently, especially this week, saying, hey, what do we think the diminishing returns are going to be on Bitcoin, right? The first cycle was 30x and 8, or the last cycles were 30x and 8x. And now it's like, hey, well, that would mean we're going to be like 2x, right? But we were only working with a very small group of people. And as institutions and as countries get in here, we're talking about a lot more money. And that also, to me, lends the course of sort of normies wanting to get into the space. Because as Bitcoin goes up, we could potentially see a huge FOMO push this cycle up to a crazy amount. I've seen people talk about 100K, 150K, 175K, 240K, 270K. There are a lot of numbers being thrown out there. So where do we fall? Let's get into some of these articles. But before we do that, Zenith, anything that you wanted to bring on TA-wise, show the people, or are we good there? I know we've gone over that a lot this week with Jay and stuff.
Yeah, I mean, TA-wise, there's honestly been more macro effect on the chart price as opposed to just traditional like market psychology. Although to your point earlier, which is that we did not expect to ever be at all-time highs around the halving. I mean, this is the part where I say that if everything had gone according to plan, that is not going according to plan, because something will always come up when it comes to the crypto markets. It's still just that volatile, in my opinion. But as far as where we are right now with crypto, I mean, we hit the halving on Friday afternoon for us in the United States, right at about like 64,000. We're currently sitting at about 65,000. It's been pretty slow moving. Obviously, the big event last week was when all the Israel, Iran, Hamas stuff was going on. That severely affected the markets, and there were some really good times to find a good entry point. And then I think one of the points that Nate's going to bring up here later in a bit is that there's a very high likelihood that we could just be chopping sideways. And that is right along with Jay's talk previously about talking about how we're in a bit of a flat pattern. When you look at the Elliott wave, we had a full 5-wave cycle going all the way up to our all-time high. But now we're in this flat pattern, which is a corrective pattern that we have to complete before we can start our next 5-way sequence towards the upside. So that's what we're in right now. The only other technical thing of note is that technically the 20-day moving average did drop below the 50-day moving average. So that's a shift in momentum a little bit. But outside of that, it's still pretty much ops normal.
Yeah. And, I think a lot of people, especially in the traditional markets, were really worried about what a full-on war between Israel and Iran and other countries in that area would bring up. And we saw that volatility in the market, and we saw that volatility sort of trickle over to the crypto markets as well, because, look, we're still correlated to the traditional markets. We haven't broken off and become our own yet. Doesn't mean that we won't. We just haven't yet. But I will say, at least from my standpoint, I think what happened was as bullish for the markets as could have possibly happened. Israel says they strike 3, places in Iran, Iraq, but nothing of note. It was sort of just like a, hey, warning strike. And Iran's like, nope, we didn't even get hit with anything, so we don't have to retaliate. And so I think in both cases, it was Israel saying we could retaliate if we want to, but we're not. And Iran saying you could have retaliated, but you didn't, and so we're not going to retaliate your retaliation. So essentially, it was like, hey, in my opinion, it's like neither of these countries are ready for another full all-out war between them, which honestly is huge. I think that was a really big sort of de-escalation of that potential scenario.
It is. And for all my foreign policy nerds out there, you kind of got to pay attention to the metagame that surrounds international relations. But did Israel technically hit Iran back with a few missiles? Yes. However, that is part of the game plan, because by hitting them in that way, they are not hitting them on the macro scale, which is that this is not full-on attack, this is not full-on invasion, and at the same time, it's trying to reestablish deterrence. Because if they had done nothing, then honestly, it's just showing weakness, which invites more attacks, as opposed to this, which is trying to reestablish balance. And yeah, it doesn't seem like a lot of WWE when you take a step back. Like, yes, Israel struck back and was like, look, we can touch you at any time if we want. We're just choosing not to at this point because we don't want to just engage in mutually assured destruction. And then on the flip side, Iran is standing in the center of the octagon saying, nobody touch me, I'm still the king. And it's like, yeah, sure, man, whatever. So
tit for tat is like the most effective deterrent strategy for both like maintaining workable relationships and also like stopping people from fucking with you. There's this really good systems theory video that Crypto Kool-Aid sent me a while back that basically talks about like the different strategies for attack and like response, and like, oh, you fuck me, I fuck you, like bloody da da da. And there's a whole bunch of different strategies where people are just like, I'm always choosing peace or I'm always choosing war. And the one that ended up with both parties winning the most was the tit for tat strategy, which is just, essentially what Iran and Israel are doing there. So this is something that's historically always basically been a precedent, but like only just recently in this modern day and age have we like done a whole lot of like exploration of the theory and everything. So that's just my little 2 cents I want to throw in there.
Yeah, shout out to Crypto Kool-Aid as well. That man single-handedly made me go down a rabbit hole that lasted 4 to 5 hours this weekend. So thanks, brother.
Dude, that was a good ass rabbit hole. But yeah, that enough said on that. We don't want to get stuck on that. That'd take forever.
Let's check in with the community.
Yes.
Bring up some of these starred comments, Mr. Producer. I would appreciate it. Centurion 54X. He could have said first, but he said, good evening, Degens. Good evening, Degens, and good evening, Degenettes. I hope everyone's doing well. Thank you so much, and glad you could catch the replay in the future. Dre. These nuts. Welcome, brother. Good to see you. Hex Glenn. Welcome, welcome. Thanks for joining. Appreciate it. And Ramon Carrillo. What's up, fam? How you doing? Welcome to the DGen Roundtable. And I see one more here. Hex Hodl Pulse. I love it. It's a great name. It's a good name for right now. Just chill. Just chill. All right. So we have, as we mentioned, a Bitcoin halving that just went through, and it was great. If it was UTC, it was 420, which I think is hilarious. So what is the Bitcoin halving and what isn't it? So first, as Zenith said, we're not literally cutting in half the supply of Bitcoin. It's not a stock buyback, right? We're not buying back or making the supply half in existence, right? In traditional finance, that would make sense, right? Okay, we're halving the supply. So we're going to buy back half your supply, and now there's half Bitcoin left. No. As you all know that are watching, hopefully you all know that are watching, but maybe a few of you are just trying to get into the crypto cycle and you're trying to learn a little bit. It just means that when a block is mined of Bitcoin, that instead of paying out a previous amount, it now pays out half of that. So 25 Bitcoin, then 15 Bitcoin, then 12 and a half Bitcoin. Down and down and down we go. And yes, so that means more scarcity, which tends to increase the cost because the miners are still paying whatever the cost of their mine it. So if you're receiving half of payment, well then, or half of the payment in Bitcoin, then that means the price of Bitcoin will probably need to go up to make it worthwhile for them to continue to mine it. So that is a pretty bullish scenario. It reduces the amount of Bitcoin or how often it comes into the market and creates more scarcity. What else creates more scarcity? Institutionals holding Bitcoin, countries holding Bitcoin, Cathie Woods, Michael Saylor that think that their exit strategy is holding Bitcoin. So all of these things are really creating scarcity within the Bitcoin sector. And as we know, there's only 21 million Bitcoin available ever to be mined. And so, we'll see what happens. But what do you guys think? What is this Bitcoin halving cycle look like? And do you see it different from previous cycles? Do you see us continuing to go up, or have we already done what we're going to do, and we need to work on a left translated exit strategy?
I really don't think so. Yeah, here's what oh wait, I'm sorry, I didn't hear you.
Zenith, take it away real quick. Or Nate, somebody. Only one of them.
I'm going to go for it. I got a few stats I want to throw out for a little more context. So, as Brendan was talking about earlier, we are going down in block rewards. Previously, it was 6.5 Bitcoin per block that was distributed to everybody that either collectively solved the problem together, or that single 6.5 Bitcoin reward was sent to the singular person who solved the block all by themselves. That is now being cut down to 3.125 Bitcoin. So a Bitcoin block lasts about 10 minutes. That means that previously we saw 900 Bitcoin enter the market every day. Now we're only going to see 450. So just for point of reference, if we multiply that by the current price, which is about $65,000, that means that roughly $29.25 million worth of Bitcoin is entering the ecosphere every day. Not necessarily the market. However, if the Bitcoin miners just purely sold it, then that means that every day, $29 million of sell pressure would enter the market. Conversely, that means to keep that market price the same, that means that the market would need an influx of about $29 million every day to keep that price right where it is. Not up, not down, just net even. So with this cycle in particular, one of the things that has been bounced around is that this might be a bit of a change in the typical pattern of how the Bitcoin halvings work. So for anybody that took their Econ 101 classes, that means we have a supply curve and a demand curve. Previously, a lot of the market price has been affected by the supply curve moving. In this case, the supply curve moved again. However, with the halving, it's not just a linear progression. It's actually more of a logarithmic, which is that we started off with like 50 Bitcoin per down to 25. That was a reduction of 25 Bitcoin per block, but now we're at a reduction of 3 Bitcoin per block. So the diminishing gains are lessening. However, conversely, at the same time, when we are entering mass adoption, which I believe we are at this point with the ETFs, we're actually starting to move the other curve, which is the demand curve, which means that the demand is going to be what's driving the market this bull cycle, in my personal opinion, and that's where I see that. Just for some reference, I apologize because I don't have up-to-date stats. However, one of the stats we do like to reference is that by the end of February, all of the ETFs collectively bought up 7.5 million Bitcoin. Not dollars worth of Bitcoin. That is the raw number of Bitcoin. So keep in mind, we have a maximum supply of about 21 million Bitcoin, which means that this supply is going to start to dwindle very quickly. And that demand curve, in my opinion, is what is going to drive the markets this time around.
Yeah, no, you kind of said what what I wanted to say, but you got the stats to talk about it. But the other thing that I think we're starting to run into now is kind of like traditionally after the Bitcoin halving, we're going to get several months, traditionally of either downwards pressure, right, or just kind of like bouncing back and forth. But the thing that I was thinking about is the amount of buying pressure we have currently with the ETFs is kind of insane. Like, we already had a huge amount of buying pressure while it was at 900, right? But now that we're dropping down to 450, it's like, okay, now like there's going to be a huge amount of buying pressure that I don't think we're necessarily, maybe we'll be chopping sideways for the next 3 months, but I think we're still going to continue to go up. However, in looking at the Bitcoin chart, it does seem like usually right around the Bitcoin halving, we'll have at least 2 months that are red immediately after, and then we'll start going up from there. It does seem like that's kind of the normal thing. So I wouldn't be surprised to see this month end red, and then May becoming red as well. If not May, and then also June. So interesting thing, hold on to your nuts, and I would say look to buy right now. This is the time this is like the dip in the market where you really want to start buying before we really truly start taking off.
Yeah, and Z had mentioned it when he was giving a monologue earlier, pretty much discussing how he and Jay, and I believe I've echoed it some as well, a corrective pattern is emerging, and the need for a corrective pattern to keep the right translated 4-year cycle pattern intact. But that point aside, what we're coming into right now is it's supply and demand playing out before our very eyes. And with the Bitcoin halving has already occurred, that has halved the supply while the demand is either maintaining where it currently is, or the supply, or the demand is starting to increase, given adoption, given the spot ETFs, and given the overall bullish sentiment from what we saw when the spot ETFs came out. The only real deterrent to that I could foresee is the OTC trades that have been occurring. OTC trades are something that don't affect the market price, so it doesn't send Bitcoin sky high, or it doesn't drop it to the floor depending on how the trade goes, because it's done in a private setting. But there's only a certain amount of those that can be made. There's only a certain amount of buyers, there's only a certain amount of sellers that are going to be willing to do an OTC trade pretty much. What happened here? Yeah. Anyway, I'm going to go back to there we go. I'm going to go back to what I was talking about. There's only a certain amount of sellers that are going to be willing to do OTC trades. And then, we'll get back into the normal flow of things where the increased demand matched with the drop in supply is going to do what has happened over the last 3 to 4 cycles of Bitcoin, which is after the halving, price tends to go up. So I think it'll very much rhyme, and I think we're going to see something very similar to what we've seen in the past.
Yeah, and sort of just to echo what you're all saying, is in the past cycles we've seen a dip, right? And then we've seen a lot of sideways action or slightly up action. I think in 2016, it took 110 days after the halving for us to start to see higher numbers on Bitcoin. So we could see, 2, 3, 4 months of down to sideways action. But I do want to reiterate that this cycle is different because of institutional money in, right? Ethereum and Bitcoin ETFs are coming out in China, and that opens up money to a whole new part of the world where China was a bit iffy. And I think they're starting to realize that they need to get in because this is a battle for Bitcoin. This is a battle for technology and a battle for the future. And as people start to realize this, I don't mean people like us plebs. We've known this for a while. I'm talking about institutions. I'm talking about countries. And I'm talking about people that want to have power within the world. It sounds weird, right? That you need Bitcoin to have power, but it certainly seems that institutions and countries are starting to think that way. And between the halving and the other things that are driving scarcity, this is only propelling a potential for this cycle to be a little bit different. We may not need as much of a pullback. We may not need as much of a consolidation. We may not need as much of a sideways action as we have in previous cycles because we have a lot more money pumping in. Now, that doesn't mean that I don't think it's healthy to have that. I've been saying for the last 6 months that we haven't had any real corrections. We haven't had any real consolidations. And that was a little worrisome. But it might just be that that's the way it is, all this money coming into the market these days. And so don't expect it to be exactly the same, right? Things are already slightly different, but don't expect it to be too different either. I'm still expecting new all-time highs to be quite a bit higher than what they were pre-halving. And even though we made a new all-time high pre-halving, multiple new all-time highs pre-halving, I don't think that means that we're not going to get another 2 to 4x on our Bitcoin numbers. So 2016, we had a 30x in that cycle. 2020, we had an 8x of the Bitcoin price in that cycle. And a lot of people think that this means we're going to have a 2x, from our all-time highs this cycle. But what is different? What is different?
Well, let me ask you a question real quick. When you say we had a 30x and an 8x, what metrics are you measuring from?
From previous all-time highs.
So, okay. So you're saying so from 2017 to 2021, that was a 3x. Am I correct in that?
8x.
It was an 8x. Okay. Didn't it top out at $20,000 in 2017, and then it topped out just under 70.
Say it again, Josh.
Yeah. So didn't Bitcoin top out around $20,000 in 2017, and then it would have topped out around 70,000 in 2021, if I'm remembering that correct.
Gentlemen, I got you here for the stats.
Yeah.
So in 2013, we topped out at about $1,150. 2017, we hit up to about $18,000, and then in the last one, we went up to about $69,000. So talking about from X's, from 2013 to 2017, we did 16X. And then from 2017 to 2021, we did a 3.5X. So on the chart, that's 1,500% and 250%.
Perfect.
Gotcha.
You have the numbers. Thank you. So this cycle would be a third of that.
Personally,
I think. Yeah, Nate, go ahead, and then I can hop in.
Yeah. Yeah. So the idea that, you know, we're going to get less X's, I think, is definitely going to be incorrect. Number one, like we already kind of went through this, I believe it was on Whiskey Wednesday, about how the muted top, right, of last cycle, technically speaking, it shouldn't have been 69,000. That shouldn't have been the top, right? There's, and Josh, you talked about, you know, how the Android disease virus was most likely the reason why we didn't quite top out at 100K. Because when I did a whole lot of technical analysis, it should have been about 101 should have been the top. Whereas if that did happen, then we technically haven't hit all-time highs yet, and the cycle is still running just perfectly how it's supposed to be going anyways. But if you include all that, right, how does that change your metrics, you know? And I know, Josh, you were talking about how it's like, well, it doesn't matter, you know, how it would have changed metrics. But I think when we're trying to guess what's going to happen in this cycle, I think it's important to understand that if we did hit that top of $101,000 Bitcoin last cycle, how does that change this cycle? How does that affect this cycle? And I think it's going to be more likely that with the extra institutional power, buying power and everything going on, I think we're going to find that the cycle may be different, but it's not actually different. The cycle that was different was last cycle, and that was because of the Le Corona. So that's my thought process.
Yeah,
Yeah, and I
go ahead, Josh.
Yeah, I tend to agree with Nate here. I think if there's going to be an anomaly, it's going to get shown that it was the last cycle that there was the anomaly, and due to the Android 19 drop that occurred, and yeah, we did talk about this on Whiskey Wednesday. I'm not going to rehash. If you guys want, go check in the channel after the show and rewatch that episode or watch that episode. You guys can see the full discussion there, but the only thing, even if we, it was so it was a 3x from 2017 to 2021. So even if we only 2x, let's say, me and Nate are both wrong here and we're misreading the sentiment and it only 2x's. All right. Well, then we're talking about $140,000 Bitcoin. And I think if that's the case, it's because institutions have begun to front run all the bullish momentum that is going on. I think if what has occurred in the past continues to play out and we don't get the X's that we're anticipating and we are misreading the buy pressure that's going on, or we're completely forgetting to account for people front running the market, which very well could be the case. We don't have crystal balls, so it very well could be the case. But at the end of the day, I have a hard time believing that with the institutional money that has come in and, everything that has been absorbed, not only through BlackRock, but through Grayscale and through Michael Saylor and all these institutions that are sucking it up, it's hard for me to believe that they would front run it in a coordinated effort that soon afterwards, because I believe they see the potential, they see the adoption that's coming, and they see the value and the revolutionary aspect of cryptocurrency. And I believe they are trying to be the Rockefellers of this generation right now, and they are trying to be the first, because the first is always going to be who makes the most money. So, I agree with Nate. That's the sentiment. However, we always have to leave room for what if we're wrong. And if we're wrong, it's because there's been a large amount of front running in the market. So, but that comes down to every single person making sure that they are doing their due diligence, that they're understanding how to read momentum, how to read the markets, and understand how to read charts and the fundamental analysis that goes in, not only the technical analysis, but the fundamental analysis as well, and the behind the scenes portion of it. And that comes down to every single person. So, Brendan, what were you going to say here?
Yeah, so I was trying to figure out where my notes were, and I found them. So those X's I'm talking about were from the halving date, from the halving to the top of that cycle. So
yeah, that makes more sense. That makes more sense then. Yeah.
Yeah.
Sure.
So it was let's see, 92X in 2012. It was 30X, and then it was 8X. So as you can see, went from 92 to 30 to 8. So a lot of people are talking about from there, if you extrapolate those numbers, you come down to that 2x range from Halving, which would put us in the 120K range, right? Give or take 125. But I think everybody that's been talking about that isn't taking into consideration everything that you guys just said, which is there's a lot more money being pumped into the market. And as more countries and as more corporations want to hold Bitcoin on their balance sheet, this is and Ethereum, right? Let's not forget that Ethereum is coming next, and China is doing them both at once, Bitcoin and Ethereum. Ethereum spot ETF may not happen in May because I think that the SEC is just going to want to give a middle finger again, and then it's going to go to the courts. And then this fall we'll get an Ethereum ETF, which by the way was my most bullish scenario previously, because I think that'll help extend the bull run rather than things running up too fast, like Josh was saying. We want things to kind of crab. We want things to pull back. But so 92x, 30x, 8x, yeah, logically people say 2x would be your next number after the halving, but I just don't see it. I'm thinking we're still going to get a 3 or 4x, and that would be pretty bullish. I mean, even Richard Hart has said it. We've had a lot of people start coming out with this narrative. I think the average, I saw a couple of polls, the average that people thought was going to top out was like 120, 150,000 this cycle. But now you're starting to get some people that have called the tops and called the bottoms or been very close to it previously. And it's interesting because I think that we're stepping up to break that cycle. But if that happens, guys, and we don't get a diminishing return cycle, what happens then? Is this the last blow off the top, and then every other cycle from here on out potentially could be diminishing returns? Might not be as big of an increase. Could this be our final big increase in price post halving? Is that a possibility?
I think everything's set up for a super cycle as of currently, especially if you take into account the muted top, right? Maybe we shouldn't have gone as high. And now all of a sudden we have all the ETFs that are going to be around the world at this point. I think we're way too set up for a super cycle, aka go up a lot.
So what you're saying is like a perfect storm theory that might be a brewing. Is that what you're saying?
We may or may not have talked about this perfect storm theory all the way back at episode 3.
Yeah, this harkens me back to almost a year ago, right? When you guys were talking about this perfect storm. Can you explain to the folks at home the elevator pitch real quick for the perfect storm for those who might be new and have never heard it before?
Yeah, I can give a quick elevator speech, and then Nate, you can fill in anything, or Josh or Zenith that you want. So this sort of theory started to snowball with Josh and I at a bar. First time we met up in person, and just slinging back some drinks, having some dinner, and we're just we're talking markets, we're talking possibilities, and what was 9-10 months ago? We're in the middle of a bear market or the beginning of the bull market, right? And we're talking about how the potential cycle could shape up and all of the potential good things that could happen leaning toward a perfect storm, right? It takes a lot of different things that happen within Mother Nature to create a perfect storm. And same thing in crypto. But there were a lot of potential puzzle pieces that could fall into place, or building blocks, so to speak, that could start to stack up and create, a unique cycle. And what was the first? The first thing is Bitcoin spot ETF. We would have institutional money coming in to a Bitcoin spot ETF. That would push the number higher, which check it has. We then said, well, if the United States launches a Bitcoin spot ETF, that could lead other countries to want to not be left behind and create their own spot ETFs, like China. Now, what do we see? China's launching a Bitcoin and Ethereum spot ETF. And then we said, well, all of that happens. What would be the next puzzle piece to fall? Well, we would need probably an Ethereum spot ETF to fall into place here in the United States. Well, that looks like it's probably going to happen at some point this year. And so what happens when institutions in countries and people like Michael Saylor and Kathy Woods don't want to sell their Bitcoin? It creates scarcity, but it also creates more demand. It creates this sort of fear of missing out in the normal society, people that are like, hey, why didn't I buy into this Bitcoin? I don't want to miss this out. So now we start to get this sort of separate side. So we have the institutional money coming in first, then we have the retail. Now, remember, maybe you don't know this, but China is a big retail investor. So if China allows their retail to really be opened up to this, that's going to be a huge potential pump into the market. And then, of course, we have all of those other retail investors around the world, including the United States, that generally hop in toward the end of cycle. So the institutions lead the way, countries lead the way, like El Salvador. We have MicroStrategy. We have all of these companies. And by the way, there are companies in Japan. There are other big companies in the United States that are talking about adding Bitcoin to their balance sheet just to have some, right? Just to get some of that in here. So this is just a quick hash of, there's a lot of things that are starting to fall into place that are making this cycle very different from other cycles. And I think that we only have one really true super cycle left in Bitcoin. And that doesn't mean that there aren't other coins that could have crazy cycles pop off the top. But if we go from a 3 trillion market cap last cycle to a 12 to 15 market cap trillion market cap this cycle, I mean, that's insane. I mean, you know, from 1 trillion to 3 trillion, that's a 3x, right? 1 trillion to 4 trillion, 4x. Sounds like a lot, but if you 4x from 3 trillion, that is just an incredible amount of money that the entire space is worth. And if we talk about Hart's Law, I mean, everything is going to start to go way up along with Bitcoin and along with Ethereum. I mean, if we hit 250,000 Bitcoin and we hit 20,000 Ethereum, I mean, just think of what the altcoins are going to do at that point. So, Josh, anything you want to add to that?
Yeah, well, now I don't necessarily know what that I want to add to it, but I want to supplement what you just said by making the statement that we've already seen two major macro anomalies that we haven't seen before. All right, first off, Ethereum bottomed 6 months prior to Bitcoin in 2022. We had never seen that before. All right, in past, it was Ethereum and Bitcoin bottoming around the same time. And so that was macro event number one. That was an anomaly. That was a break from the trend. And number two, which occurred much more recently, is breaking the all-time high before the halving. All right, so we are very early in this bull market to be breaking all-time highs. We aren't forecasted to break an all-time high until like the fall time frame. I want to say like between when I charted, I want to say it was between October and December is when usually in cycles past we would have reached all-time highs again. And that would have been after the halving, probably 6 to 9 months after the halving. But we've already done two things that are a break from the norm that could signal that this could be something that is very different from what we've seen in cycles past. And also last point that I'm going to make here before I turn it back over to whoever wants to speak next is take into account the recent extremely bullish sentiment that we've had. This has all been without the Asian market really coming into the play. All right, this is all pretty much off the back of bullish sentiment and the U.S. Approving the Bitcoin spot ETF. That's what allowed it to push to all-time highs. Imagine where we can get to if Hong Kong comes out with a Bitcoin and spot ETF at the same time. Imagine what that could do to the markets. That's why me and Nate can sit here and say that we feel very confident that the sentiment will continue and that the channels and the flows and the income that will be coming into cryptocurrency will be more channels than ever before. And because of that, it's going to be extremely difficult to see what Brendan was talking about earlier, where, you know, maybe we won't see as harsh corrections over this bull run that we're about to get into because of these new flows of money that are coming in. So does anybody want to comment on that or have any additional thoughts or anything like that?
The global market cap for stocks is about $110 trillion based on the stuff that I'm seeing. This is from late 2023. We hit about $2.7 trillion market cap for all of crypto this last cycle, if I'm not mistaken. So if you want to go into that,
it was
even
three.
if we-
It was 3 trillion. I just want to correct it real quick. It was like 3.1. I think was the top was around 3 to 3.1.
Yeah, I got my chart up here. It looks like we just kissed 3 trillion before heading back down.
3, yeah.
So, I mean, based on that assumes that what Bitcoin is 3% of the entire global marketplace. Effectively, that is. I mean, when you talk about Bitcoin dominance from the standpoint of dominating the total market cap, that seems. It's not insignificant. However, at the same time, we got to keep in mind that effectively all we're creating here is just a store of value. We're not actually creating any goods or services entering the marketplace. So to see that this kind of asset class just keeps eating up the global market cap already, it seems like it could very well keep going up. But the answer is, how much is it going to keep going up? I don't know. One of the common figures that we've heard, not just for this upcoming cycle, but before the end of the decade, so to speak, is that people talking about Bitcoin hitting something like $750,000. And even if Bitcoin hits $1 million, then that means that $21 trillion worth of value is just purely in Bitcoin. And at that point, you got to start asking yourself, like, is this just performing so fast that everyone else kind of just yeets everything into this, and then we just go truly exponential? Or does this actually level out at a certain point? I'm not going to pretend to have the answers on this one. $750,000 Bitcoin before the end of the decade would mean, like, what, we hit 250 this time around. That's like a 3.6x, and then from there to 750, it's like a 3x. So in line with diminishing returns, it kind of makes sense.
Yeah, it's but that diminishing return would still be less than what previous diminishing returns would be, right? And so that's the difference. The difference is, well, we expected X in diminishing returns, but in fact, it was only slightly less than a previous cycle, or maybe only half of what the previous cycle is rather than a quarter. There's something else that I think is interesting, Zenith and Josh, you guys talking about, and more and more people in the chat too. People are saying there's just a lot more. There's a lot of big people in traditional markets that are kind of hopping on the Bitcoin bandwagon, so to speak. There was a gentleman on Ivan on Tech this week. I don't know if you guys are familiar with him, Amadeo Brands. He's a partner and CTO at DeFi Capital. He was one of the people that actually called the Bitcoin and Ethereum top. Like, he called both of them last cycle. And he put out his scenarios for essentially like low end, medium, and then high bullish for this cycle. And he was actually in the thought process that the most bullish cycle is going to play out. And his high bullish cycle was like 270,000, 207. Sorry, I forget the number. It was like 250,000 Bitcoin. His medium cycle was 172,000 Bitcoin, and his low cycle was 103,000 Bitcoin. But he thought most likely was 250,000 this cycle. And I think he said something like 29,000 ETH this cycle. So that is ridiculous to think about if we go up that much. And like you guys said, China coming in, Michael Saylor coming in, Fidelity. And then, what happens when, the princes in the Middle East want to get in? They're not going to want to miss out either. There's people, they're multiple multi-billionaires in the Middle East. And if they're not already in a bit, they're going to want to get in more. And so this is also going to continue to drive up that sort of retail and an individual investor prices. So we'll see. Our bullish scenario started 9 months ago, and so far it's played out to the T. And even back then we said, we don't know if that's going to happen, but if it were to happen, look out for all of these building blocks or all of these puzzle pieces to start falling into place. And so far, they all have. That doesn't mean they're going to continue to do that. But like Josh said, hitting an all-time high prior to Bitcoin halving gives the opportunity for a huge bullish cycle. a huge opportunity for us to blow off the top. And if we get that blow off the top, I think it'll be our largest net return, our largest increase in market cap of the crypto, probably out of any cycle in the future. Now, maybe like Zenith said, we continue to just keep blowing off top, but there's also macroeconomic things that are playing into the space here, right? What are people worried about? Inflation. We're going to get into that a little bit later. What is happening in the United States? Well, the Fed is like, well, we might not cut rates because we are still really worried about inflation. And so I think not just in the United States, but around the world, people are seeing that, and they want to find something to offset their value, right? It's like hedging your bet. If you have a 10-team parlay and you've hit 9 teams, well, you're probably going to bet on the opposite of what your last 10-team parlay is, right? So that you can hedge that bet. And so Bitcoin is a huge hedge against inflation. And I think that it's going to be the best hedge against inflation long-term from here on out. So we haven't even talked about the macro aspect of the market, but I think that that's also playing into sort of this institutional and countries getting into Bitcoin a bit more.
I do have one thing I want to point out real quick, though. So when it comes to talking about these massive market caps, which we have, is that understand we're going to get to a point where it's like Michael Saylor is not going to go personally cash out $2 billion worth of Bitcoin into raw cash. A, because that's not what he's going to do. And B, because it's like not physically possible. What I mean by that is when you think about, we're going to start approaching that area of traditional markets where it's like this money exists purely on paper. And what I mean by that is that these things are valued at these things. However, you cannot physically get that amount of cash. And if you tried to get that physical amount of cash, you would crash the entire market. I believe this happened previously when like Mark Zuckerberg was he just wanted to get like $1 or $2 billion from just selling stock. And just the idea alone, that proposition that got like rumored out into the world dropped the meta price by like 10%. And that's not even the actual sale. So Bitcoin is approaching this size of game where it's, even if you wanted to, I mean, small retail investors like us, we could easily cash out because we are just like drops in an ocean, not even in a bucket, but in an ocean. However, when you actually have people that are the size of like Michael Saylor and even countries at that point, trying to move around that size of capital and transition it into a different asset class is going to be physically impossible.
You don't have to, though. You don't have to sell the stuff to get the cash value out of it. You could just take out a loan against it and then pay the loan back, make the money some other way somehow. Like that's how you realize. So for the folks at home, that's how rich people realize the wealth that is their assets, is they take out loans against their assets and just like get like a super duper low interest rate or something. And then they go to use that money to start up businesses or create other cash flow enterprises that then pay off the loan. And the loan just essentially exists in perpetuity. And if they ever stop paying it, then whoever they took the asset, the loan out against the asset, they get the asset. It's the same. This is like Robert Kiyosaki's investment strategy, and I presume this is Michael Saylor's investment strategy. He's never gonna hit that red market sell on that Bitcoin. He'll probably take out a loan against it, or I think that he's leveraged against it right now as it is anyways. So something somewhere has to be making the money that pays the loan that is him like borrowing. I think he's borrowing against his company or something. I don't think he's just straight up market buying. I could be totally wrong. I know very little about this, but like that's like he never has to sell. When you're rich and you got good assets that the rest of the world believes is good assets, you never have to sell them. You just take the loans out and you find a way to make the money that loan is generate cash flow. This is a great, you guys should go out and play the board game Cash Flow that Robert Kiyosaki made, because it teaches this principle phenomenally. So that's all that I had on that.
Yeah.
Will,
and you don't,
right. Sorry, Josh, go for it.
Yeah, just real quick. Will, you don't have to know exactly what he's doing. It's easy to assume that because that's the status quo, right? I mean, that's what high net worth individuals do. That's how they conduct business, because that is the easiest way for them to go about conducting business. So whether we know Michael Saylor is doing that or not, it's presumed that he is because he's in a position where he can do it. So that's all I was saying. Z, go ahead.
Yeah, Will and Josh, you guys are entirely correct. When it comes to this size of scale of game, it is that point where it's like you don't sell things, you merely transfer value between different assets, whether it's selling a large company for Bitcoin or going a different direction around there. It's the idea that the value is kind of locked in the marketplace. It just shifts where it is. It doesn't actually go back to dollars per se. And I think that this is only a positive thing for the narrative that Bitcoin is a store of value, because it's almost solidifying that value permanently in the blockchain or in that major asset class, if you want to call it that.
Yeah, and I think you said it can stay in the crypto sphere, right? Grayscale's talked about this. They want to take some of that money from Bitcoin and move it into other coins. What happens after Bitcoin hits its all-time high for a cycle? That money moves into Ethereum and other alts, and then we get a new all-time high for those. The difference is this time we may get flows from Bitcoin into these other altcoins and into Ethereum, but we may still get a large institutional buying and countries buying of Bitcoin because they still need some. They still need to get into it, and that's different than this cycle. So we could still see both rise in a way that we haven't seen previous cycles. But that's just one theory. Other people think that maybe the halving's the top. Maybe we're not going to get any higher than 70 or 80K. I've heard that as well. I want to go to the next article, but you guys want to add anything before I hit some of these chats? Shout outs to our community. Cool.
Yeah, well, I got something on Saylor, though. I've been patiently waiting here. So the thing about Saylor that's really interesting is that he legitimately he wants to buy Bitcoin and he wants to hold it and he does not want to sell. All right. So yeah, we already discussed that. But here's the thing that I find very interesting. And this actually goes along with like the Bitcoin miners and all that, right? With this Bitcoin halving, it's going to be very difficult, or even more difficult, I should say, for the Bitcoin miners to be making money, right? So there's going to be a lot of people who are just in their basements mining Bitcoin that are just going to, it's not worth it anymore, and there's a lot of smaller businesses that will do the same thing. Quite frankly, we're going to hit a point where the only people who can mine Bitcoin are governments, frankly, because they get that free electricity themselves. Okay, so now what is it that I've been talking about for quite a while now about building the fence around Bitcoin? Well, that's a part of it. You own all the miners, right? And governments of the world. And then you also buy up the majority of the Bitcoins on the market. And so now you control the marketplace, right? Bitcoin itself, and I think this is kind of where Saylor is going with it, is Bitcoin is starting to turn into something where a few individuals are going to be holding Bitcoin, and it's going to be extremely difficult for the marketplace or the economy to actually be buying them and all that. So I kind of see Bitcoin as not really, kind of like how gold is right now. It's really difficult to go and get gold bars, isn't it? You can't just buy a large gold bar. You have to go through like a ton of regulations and or a ton of money as well, but then like through governments to be able to get it, right? That's where Bitcoin is going. I think they've been planning this for a while, and they've been, the governments of the world have been trying to do this, try and get their piece of the cake, so to say, a piece of the pie. And I think that's also why China has been doing what they're doing right now with the ETFs. I know that they were trying to experiment with Hong Kong, and Hong Kong has done well enough where they're like, you know what, rip, let's go, because the United States probably got the spot ETFs out sooner than they wanted to. And that's mainly because of the big players of like BlackRock and all of them putting pressure on the SEC. The whole point of the SEC right now is to slow crypto down. So now what are you getting? You're getting the governments of the world in a race, a literal arms race to buy as much Bitcoin as possible, get your biggest piece of the pie as possible. And that's kind of what's going on right now. So it makes me want to buy at least one Bitcoin and just hold it and see what the heck happens,
Yeah, it's also...
Go
ahead. Well, I was
just gonna say, I got a fun fact real quick. I looked up the gold bar thing just to double check. I think you can, allegedly, according to the internet, but the interesting fact here was a 1 kilo bar of gold is roughly about $75,000, which is damn near the price of one Bitcoin right now. Funny how that works out.
Similar to gold, I think it's very possible within the next 10 years what you'll start seeing, and the seeds of that are being laid right now, is these companies that are buying up the Bitcoin, the institutional companies, will start breaking up Bitcoin into shares and issuing paper based on those shares. Within 10 years, it is very possible that that is the path that we're going towards. So, 2034 rolls around. You guys take a look back and remember that at this time in 2024, we saw the beginning, we saw the foundations of this being layered. And it didn't even start just recently. It's been going on since last cycle. But I think we'll see a lot more of it in full force, and we'll start seeing the hoarding of Bitcoin from the institutions over the next cycle or two. And then that's when you'll start seeing not so much Bitcoin being traded, but shares of Bitcoin in paper form being traded to customers from these institutions.
Hey Josh, so in 2074, is that when we go off the Bitcoin standard?
2074? Oh,
So
yeah,
we go on the Bitcoin standard.
it's possible.
There's one thing that Nate, I think that you missed a little bit on the mining, is that I think that's why the last several years, a lot of Bitcoin miners have been trying to go green, so to speak, use renewable energy so that they don't have to pay for the government's electricity, that they can be a little bit more self-sufficient in their mining operations. Now, I don't know what that's going to be long term. I think last time I saw something like 60% of Bitcoin mined now is mined with what people consider green energy or renewable energy. So I think that they've kind of seen that in the future, and they're trying to hedge against just allowing the government to gain it. But BlackRock owns some of these mining companies, right? These institutions that are buying Bitcoin are also buying shares or owning parts of the companies that are mining it. So they're also kind of doubling down on Bitcoin, not just from the buying of Bitcoin standpoint, but also from, like you said, owning the actual mining equipment, owning the infrastructure that it takes to get Bitcoin. Now, what do we have? Like 19.7 million Bitcoin in circulation, 19.6 million Bitcoin circulation. So people are like, well, there's only 1.3 million Bitcoin left to be mined. So it's really not that much left. But as scarcity increases, as price increases, a fraction of a Bitcoin is going to be worth a ton of money. So, at some point, miners are going to be paid out in Satoshis because they're not even going to be paid one full Bitcoin anymore, right? So I think they'll continue to try to find ways to mine in a cheaper way, be that going overseas to build companies and getting kickbacks from countries that need infrastructure, that need to be built, that need people to come and build in their countries. So I think that there'll always be these companies, but like you said, the institutions and the governments want their piece of the pie, so they're going to do all they can to get it.
Brendan, I think you're right. We're going to see an interesting thing happening, in my opinion, with the mining, which is that the mining is going to be chased all over the world by two factors. The first one you touched on just there, which is that governmental issues. Like, do the national government tax Bitcoin at a certain clip or something? And then additionally, it's cost of electricity, because those really are the two things that are going to keep people out of Bitcoin mining. Yes, the cost of miners is very high to get in. However, that's a little more stagnant, which is like you buy it once and you're kind of done. Also, you theoretically have some resale value, but miners all over the world chase kilowatt hours per dollar, and wherever you find the cheapest energy and the cheapest taxes, I think that's where the miners are going to kind of migrate. And to your point with the renewable energy, that's one of the biggest ways that they've been able to cut costs down, is they literally just make their own energy.
Good points. So before we move on, I do want to give some shout outs to the chat. The chat is on fire today. I love to see people chopping it up in the chat. So thank you all for joining us. Honestly, the show is better when you're not just listening to a bunch of boring people talk. It's better when you are interacting with each other in the chat. So thank you for interacting. Thank you for listening. And thank you. And hopefully you're enjoying the show. So let's get through these. I saw Tam Tam. Who else we got in here? Crypto Stylist. Thank you. Degens and Degenettes, as I like to say. The Bull. The man, the myth, the legend. Go Bruins. Yeah. Scarcity and hodl. People are afraid to sell. It's just the way it is because they don't know when you're going to be able to buy more. If
It's
you
almost
sell,
like it's a pot of gold.
yeah, a pot of Bitcoin. I hope if I ever follow a rainbow to its end, hope I find a pot of Bitcoin. I hope so. Twinkie, what's up, my friend? Thank you for joining as always. Bradley, yeah, it's a great point. Trillion with a T, it's an incredible amount of money. I can't even fathom it myself, even though I know how many zeros that is. But it's just an incredible amount of money. So increasing a market cap of crypto by like potentially 10 trillion in one cycle would be unbelievable. Unbelievable. Tam, fam. Thank you as always hitting us up on Twitter, always looking out for us, always shouting us out to the rest of the community. We really appreciate you. Jemmy, not Jeremy, Jemmy. Yes. And he doesn't just promote it. The dude has always backed up his words with, hey, I'm going to buy the top and I'm going to hold. What did he do? The other day, he took out he sold shares so he could buy more Bitcoin at like 769 or 70,000. So yeah, he doesn't care about selling his Bitcoin. He doesn't care about when he's buying it. All he cares about, it's like, you're saving money for like, for whatever it is. Every time you get that money, you're just putting it in there. And men, I have to take him at his word. I have to think the man's never selling. Maybe he takes loans out on it, like Will says. Maybe he moves things around. But that's what's scary. That's why I'm afraid to sell my Bitcoin, because I may never be able to buy it back anywhere close to the price that it currently is. Now, that doesn't mean that if Bitcoin hits 200,000 this year, that I'm not selling any Bitcoin. Don't think that's what I'm saying. I'm just saying, there's a thought process that maybe I sell all my other coins and I don't want to sell my Bitcoin. Maybe that at least I have a floor that I'm not going to sell X amount of Bitcoin. Now it sounds like I have like 100 Bitcoin, which I don't, by the way. Maybe I have 100 Satoshis. But the whole point is I'm going to always want to have some Bitcoin. And maybe some of my profits this cycle go into more Bitcoin. And then that's just my stash that I'm never selling, right? That's my never selling stash. And we'll see. I read an article that someone said that Bitcoin could hit $1 billion by 2038. By 2038, $1 billion of Bitcoin. So if you have a 0.001 Bitcoin, you'd be like a multi-millionaire. So take this with a grain of salt. That's just somebody saying that. In fact, it wasn't just somebody. It was somebody, a large player in the financial world. But nonetheless, we got a couple more here. Fox Smolder. I like it. Yes, he does. And
the name can be deceiving. That's all I'll
Yes.
say. The name
don't
can
judge
be
a
deceiving.
book by the cover.
That's
right.
basically our name, DGen Roundtable, and then you got Josh over here, who's like the most conservative of all people ever.
But I love trolling. I love trolling so much.
Yeah, it's kind of interesting. We're called the DGen Roundtable, and we try to teach people how not to get wrecked, how not to be too degenerate, how to be degenerate, but do it in a responsible manner. So everything's a play on words, but it's fun out there. And honestly, I feel like anybody that's in the crypto space is a bit of a degen. It's a little bit of a degen in them, no matter what. So, one more, Paul Sachs, shout out. Thank you, brother. Always good to see you in the house. And keep those comments coming. Keep those chats coming. And Winter Wonderland, is that a subtle shout out to Alice and the Pulse Chain project? Oh yeah, there's a Wonderland crypto project. Yeah, it's a little meme coin. Alice in Wonderland themed. It's pretty cool. I love their designs. I don't know where it'll go, but
I like it. Hey, Brendan, real quick, I did want to give a special shout out to Crypto. She did a awesome stream with a few of our channel friends recently, aka Vets in Crypto, Fashion Coder, and then I forget who was their fourth, but that was an excellent one from earlier this week. So go check it out when you get a chance, and follow her on Twitter. That is primarily where you can find Crypto Specialist or Stylist. Excuse me. Yes.
Thank you, Zenith. And yeah, Jemmy, it's the same thing. It's like we'll see where the market takes us, right? Maybe maybe the altcoins go up so much that I don't care about selling my Bitcoin, right? And I'm just taking some profits into Bitcoin and then some profits into stables or into some other stores of values. But really, we have to see how the market plays out and decide what we're going to do, if we're going to hold or if we're just going to sell some and buy lower. So we'll see. Tam, thank you. You have a big heart, and we appreciate everything that you do. Great friend of the channel, and I cannot personally wait to meet you in person sometime in the near future. Okay, that was great. Honestly, chat, keep it coming. If you have questions, throw them in there. I don't want to take off this bullish sentiment back, but we have another article that we were looking at, and JP Morgan said that, quote, prepare for Bitcoin to fall after the long-awaited halving. So questions for you guys. This is a short article, and it kind of, I feel like, is missing some context a little bit. Does JP Morgan mean it's going to go down and sideways and then go back up at the end of the year or next year? It kind of says to me like they're thinking we're not going to go up much more. And two things: are they being honest or are they being deceptive in order to be able to stack more coins in their own treasure chest before we really pop off top? I feel like everything with institutional investors, you have to take with a sort of a two-sided coin. Are they being legitimate? It's the same thing with the government, right? Are they telling us the truth, or are they telling us something in order to benefit themselves? Is JP Morgan have something potentially? I mean, could we see 80,000 max Bitcoin and we're not really going to go up from here? Or are they just wanting to stack their bags more?
Chances are it's just lazy reporting. I mean, when you take a look at it, it lacks context. It's a very short article. Chances are it was clickbait. I could stand up here in every single episode. I could say Bitcoin's going to hit $100,000. Bitcoin's going to hit $100,000. And I can say it till I'm blue in the face. And the day that it hits $100,000, I could stand here and say, I told you guys Bitcoin was going to hit $100,000. And if the article was more in depth, if there was more context to it and there was some information that was supporting this information, then that's when you can sort of take that information into consideration when you're navigating through the space. But if you're just gonna throw something out there, not put much context behind it, not provide very much supporting details, it's very difficult to take that stuff very seriously. And that's a popular tactic that we've seen over the last 5-10 years, not only in finance, but just in general across social media and across digital, newspaper articles and stuff like that. It's just lazy reporting typically. I'm not saying, obviously we don't have a crystal ball. Bitcoin could fall over tomorrow. World War III could start up. Bitcoin could tumble like it did during COVID-19 in 2020. That very well could happen. All right. But the way that the sentiment is going right now, in order for Bitcoin to roll over at this point, all these flows of income and everything that we've been talking about will have to shut off abruptly in cascading fashion. And short of a huge black swan event, I don't see that happening in the short term. But hey, I could be wrong. I've been wrong before, but I just don't see it. What do you guys think?
Josh, I think you're correct, which is that there's a lot of minimal context. However, this is a sentiment that I'm starting to see more and more echoed throughout traditional finance. This is producer, if you wouldn't mind bringing up my screen, I have Exhibit A from a rather well-known person. On Twitter, we have Peter Schiff. This was tweeted out on Friday afternoon after the halving. He says, "Congratulations, Bitcoiners, on the halving. Are you guys commemorating this occasion by throwing parties? I haven't been invited to any. I think halving is an appropriate name for what's happening as soon as Bitcoin holders experience a halving of their net worths." And then even below that, with less context but more bearish sentiment, he says, "Over the past 3 years, people who bought gold have better returns than those who bought Bitcoin." Again, guess what happened 3 years ago? We had a market top based on the 4-year cycle, which we tend to follow. So again, minimal context, maximal bearishness. And then I did also not miss a chance to meme on Peter Schiff a little bit and sent him that.
Yes,
All
thank
these
you. I'm
flavors,
glad.
and you choose to
I'm
be
glad.
salty.
I'm glad you memed him because he has been saying Bitcoin is going to zero for the longest time. And case in point, he can say Bitcoin is going to zero until he's blue in the face. And if it happens, he'll be the one that stands up and says, hey, I told you Bitcoin was going to zero. But right now, Bitcoin obviously isn't at zero. Bitcoin is in a very different situation. So,
Yeah,
There's probably a
and
good reason he doesn't get invited to the parties anyways, especially the Bitcoin ones. So
Yeah.
it's
Did
Peter
this,
Schiff.
did this guy
And
really just say that? I mean, did he literally just say that the Bitcoin halving means it's half the price? What the?
no, he didn't
No, he's
say
saying
that,
it's
but he
gonna-
wishes that upon us.
Yeah, he's saying it's gonna drop in value by 50%.
He says, "I hope you all get wrecked," and it's like, "Huh? Let me wreck your party invite, dude. Get out of here."
Yeah, look, this guy is the most bearish Bitcoin person that potentially knows anything about markets that I've ever seen, and so I can't take anything he says seriously. But J.P. Morgan's different. They actually offer Bitcoin spot ETF to their customers. You know, they're allowing their customers to purchase Bitcoin, but they've been kind of bearish on it over the past couple of months. Now, most of the other institutions, BlackRock, Fidelity, have the exact opposite sentiment. So why does J.P. Morgan, feel like they're a little bit fading Bitcoin? And I think part of it might be that their bags aren't packed enough. They don't want this to shoot off the top too much. Now, this article also, like you said, lacks context. There's no time frame. Is he saying Bitcoin's never going to go above all-time highs ever again, right? Or is he just saying this year? Or is he saying this cycle? Is he saying this bull market, right? And so I think that you're right that sometimes lazy reporting happens in all areas of our economic and political circus that we go through. And I don't know if this is lazy reporting or not, but I do know that J.P. Morgan doesn't think that this is going to go up in the short term. Now, that could be mean 3 months to me. I don't know. We're saying it might not go up for 3 months. Maybe it doesn't go up to the end of the year. Maybe they're saying it'll go up in 2025. But there's just too much momentum going here. Unless there's a serious black swan event, I don't know how this momentum gets stifled, because it's not stopping, it's not slowing, it's continuing to gain speed, gain adoption, gain traction in just inertia. How do you slow that down? How do you stop it outside of, again, a serious black swan event? I don't know. It just doesn't seem sensible to me.
Yeah, and there's absolutely no timetables. There's no percentage amounts that are listed. All it says is Bitcoin could slump. Bitcoin is going to slump after the halving. Well, okay. What if it just slumps back down to $60,000 where it was a week ago? Does that fulfill the article? Does that predict exactly, what the case was if it falls, $5,000? So it's really difficult to take articles like this into consideration when they lack context and when they lack specifics. We're obviously not sitting here saying Bitcoin's only going to go up and to the right for the remainder of this macro cycle. Obviously, we're not saying that. If anything, we're hoping for a pullback so that the macro right translated cycle narrative can stay intact. Me, Jay, Brendan, Zenith, everybody on the panel has been saying, okay, Bitcoin's been way too strong for way too long, way early in the cycle. It needs a correction. And we saw a correction. All right. I'd like to see a little bit more of a correction, to be honest with you. I'd love for it to pop down to the low 60s, to the low 60,000s. Hey, even if it breaks, $58,000, I think that would be great.
Nice.
Yeah, that would be absolutely phenomenal. Get a little sell off, allow it to rest, and then boom, it's fully charged up, 2 or 3 months from now after, it has a corrective phase. All right. If that happens, that's a healthy, traditional Bitcoin short-term cycle. That's what happens. And JP Morgan, I don't know if this is meant for the ill-informed investor who they may be brand new into Bitcoin and all they think is maybe Bitcoin is only going to go up and to the right since the ETF launch. I don't know, but obviously anybody who's paying attention here, us, our community, those that are watching in attendance, if they pay attention to cryptocurrency, specifically the Bitcoin market, for any amount of time and they put any effort into it, they'll understand slumps happen. The change in price and the volatility occurs. It's gonna happen.
Do you mind if
Josh,
I put on some horns real quick?
Go for it.
What I think is going to happen is the Bitcoin halving is going to hit the market like a truck. No, not even like a truck, like a freaking train. Because I can't remember the exact, Jay loves talking about this number, but the amount that the ETFs of Bitcoin, the ETFs are buying versus how many are getting mined and how many the miners are selling. All of that, if you have that number of selling pressure, Jesus Christ, dude. It's real. We are going to be popping off.
That is the Bitcoin flows. And yeah, that kind of ties into what I was going to touch on. So Josh is right when he talks about how a back test, or a correction, as we like to call it here, is that this is going to help the cycles narratives, because we previously talked a lot about how you can short cycle, and it kind of felt like we were aiming for that. So this correction is honestly a good, like, mean reversion, aka getting back to the normal, or whatever we believe is the norm. So in this case, there's that. But yeah, the flows is what's really kind of misunderstood with what's going on here, because the market exists in a series of equilibriums. And when the halving occurred, we cut out half of the inflow from Bitcoin supply. It doesn't mean that all of it is going immediately into just pure Bitcoin liquidity on the market. However, what it does do is it does change the math. It's not going to change the amount of Bitcoin that's on the market already, but it's going to affect the amount that comes out. So you can kind of imagine that there's like this buffer, or this equilibrium zone of where we've been operating and how much Bitcoin is on the market. Now we've affected one side of that equation, so there's going to be less pouring into it theoretically. So once the existing liquidity or supply gets eaten up, that is when we actually start to see that acceleration. So right now we're in that buffer time, that mid zone, waiting for the math to start balancing out. And it's going to take time, because no one is going to buy up the entire market in one day. I know there might have been a bit of a sentiment with the halving, which is that we were expecting just 420 to hit and we just right to the moon. But nah, you gotta chew through the existing conditions and the existing orders first.
You know what's also interesting? Do you remember at the end of the last bull market, the start of the bear market, as we're going down, a lot of traditional news outlets were reporting how much El Salvador had lost in their Bitcoin holdings, how much MicroStrategy was down because of their Bitcoin holdings. And they were just trashing on all of these people that were buying Bitcoin and had a long-term plan. I haven't seen those same outlets saying, hey, MicroStrategy is up 13 billion on their Bitcoin holdings. El Salvador is up as I don't even know X amount of billions on their Bitcoin holding and are still buying one Bitcoin. Oh, by the way, El Salvador bought one Bitcoin every day until the halving. Who knows? They're still going to buy Bitcoin after the halving too. So, by the way, halving. I don't know why we all say halving.
I think it's an internet meme thing, which is like, it's something that's happening, even though you are correct. Halving is correct.
Yeah.
It's from the Ron Paul "It's Happening" meme. I don't know if you guys have ever seen that one, but that's the it's happening. It's happening. It's I think it's stickier to call it the halving, even though it's incorrect, just because it's. Well, also it spurs conversations like these, which is just, even more attention. So sorry, I shouldn't have butted in there, but
no, I like it. I also think that we call it the halving when it's leading up to it, because it's like a process that's happening, right? We're in it, but now the halving is over because it's
like hodling, hodling was originally just a misspelling of hold.
Yeah.
And then it turned into its own like little thing. It's funny how like we could just assign value to random things that are otherwise meaningless, and then they become valuable.
Well, it's not just
Doesn't that sound like Bitcoin itself?
Well, yeah, that was kind of what I was alluding to. What was that, Zenith?
I was gonna say, this is just kind of like common vernacular that you see. Like, this is the slang. This is the zeitgeist for all of the crypto space, which is we draw these points of similarities to just make quick common reference to. It's like sports analogies, but we're just doing it with crypto stuff, and it just kind of sounds real stupid, but whatever.
Yeah, and I want to sort of emphasize what Zenith was saying a minute ago. It's not like as soon as the halving occurs, the rocket launch starts. Like if we were on a roller coaster, like the train is just coming to the station. The people have gotten out of their seats. We've sat in the seat and the lap bar has come down. All right. That's where we are right now. We haven't left the station yet. All right. We still have to slowly roll out of the station and then get on that chain and start going up. And then the fun happens. All right. So we're not there yet, but we're locked in. And typically what has happened in 4-year cycles in the past, which tend to rhyme, is after the halving, that's when we get those parabolic moves that go into the next all-time high for Bitcoin. So doesn't mean we're there yet, but the fun's about to start. So just be patient.
And it's generally within right around 3 months. That's kind of your time range. So as of right now, I'm thinking that this is the time that you want to be buying, guys. Okay.
Yeah. It's I mean, look, nothing that we say here is financial advice, right? I don't have my not financial advice hat on, but it was funny. I was wearing it through the airport this past week, and multiple times, and out in Nashville, multiple times people asked me, okay, so you don't give financial advice. What kind of advice can you give me? I said, I'll give you any advice as you want. Doesn't mean it's going to be good advice. But it's funny. It kind of just created some conversations with random people in random places, which
That's
was
excellent.
funny. Can I share my screen really quickly? Can we share my screen, Ms. Producer, real quick?
You know what would be interesting while you're bringing this up is, have the not financial advice hat on with Will's bad idea t-shirt. Just combine them.
Good combo.
I like it.
Not financial advice, nothing but bad ideas.
So
those t-shirts are for sale. I'm not selling them. Go ahead. Sorry.
So if you guys can see my screen, this is exactly what I was just talking about. When Bitcoin's market price was low, they wrote thousands of articles about our supposed losses. Now that Bitcoin's market price is way up, if we were to sell, we would make a profit over 40% just on the market purchase. And our main source of BT is now our citizenship program, right? So they were giving free Bitcoin out to people that were citizens, and they're also trying to get more people to come live in El Salvador by giving them Bitcoin as well. And what are they saying? Hey, we're not taking our unrealized profits. This is our future. It's the same thing that Michael Saylor is saying. Now, I predict we're going to have another country or two buy Bitcoin this cycle and start adding it to their country's balance sheets. Because what happened? El Salvador was having huge issues within their economy. They've stabilized a little bit because of some of these decisions that they've made. So don't always just read headlines. This is another reminder that we shouldn't just always read headlines from main news article sources, because they're not always going to tell you particularly the truth. They might just want to tell you whatever their narrative is. And if they don't like Bitcoin, they don't like Michael Saylor, and they don't like El Salvador and what they're doing, then they're just going to write nasty grams about them. But when they're doing things that are good and it's benefiting them in their country, in their companies, they're very quiet, very, very quiet.
Yeah, when you look at Ava's Temple of Consciousness, she actually put a comment in there that says exactly what we should be doing to all of these institutions. She is 100% right. Correct.
Mm-hmm.
For the folks at home who are on listening, gang, Mrs. Producer, could you pull that up again? I'm going to read it out real quick for the folks that might be listening to this on replay or podcast. Banks are buying Bitcoin. Google has built the largest high rise in El Salvador. Yes, look at what they do not do, or look at what they say in the, or what they do not say in the media. Okay.
Look at what they do, not what they say in the media.
Yeah, I was I was like, am I tripping here? Okay. But yeah, look at what they don't say in the media. So Nate, to your point, this is definitely not, and also to Ava's point, this is definitely not something being like super duper well like broadcast in mainstream media. You'll notice that the things that mainstream media cranks out is most often stuff that one would presume wealthy people would want the not so wealthy people to do with their time, with their money. So if you see a whole bunch of like Jim Cramer saying like, hey, oh no, Bitcoin's bad, Bitcoin's blah-de-da, then that means that like what that'll do is it'll cause a lot of normies to sell, and that will allow the rich people to buy more. So if you don't see mainstream media talking about things like this, that, you know, there's a ton of Google stuff going on in El Salvador and El Salvador's buying up a shit ton of Bitcoin, then like just pay attention to that. I'm not saying you need to do anything with that information, or that I would suggest that you make any decision one way or another, but it behooves you to pay attention to all the things that are happening and knowing what's going on.
Very solid point. Very, very solid point. And we said the same thing, right? BlackRock couldn't buy Bitcoin, but what were they buying? They were buying Bitcoin mining companies. They were buying shares of these companies that own Bitcoin. So they were already getting a piece of the market before they could even officially hold it on their balance sheet. Now, you can decide for yourself if you think that they were buying it before they were allowed to. But yeah, so that's important. Got one last topic that we want to go over with you, because there's been a big change recently in how the government and the Federal Reserve has talked about interest rates, cutting of interest rates, and inflation. For a long time, they've been saying we're going to have 3 rate cuts this year. And I told you months ago, I'm starting to think that we're not going to have 3 rate cuts. I'm thinking we might just see 1 rate cut. I could see a scenario where we don't get any rate cuts. Now, what is it looking like? Max, we're going to get one rate cut. So we were the first one to talk about the perfect storm theory, the DGen Roundtable, and the potential for a super cycle at the start of the bull market. We were the first to talk about the Fed and how they're going to have to pivot away from 3 rate cuts to 0 or 1 rate cuts this year, when everybody was staying 3. In fact, I said it, and Zenith, I think you said this as well, when the Fed watch tool was still saying there was a 90% chance of a rate cut in May or June. And I was saying, nope, not happening. And everybody that was within our Telegram got that information in real time and was able to decide what they wanted to do with that information, but that information was likely going to be the case. Now, the real world is starting to come into view, and the Fed is starting to backtrack a little bit. So, Zenith, you have a little video you want to share with the people and extrapolate on this a little bit more?
Yes, I do. Give me 1 second to pull it up. All right, let me know if you can't hear the audio.
The performance of the U.S. economy over the past...
I listen to everything at 1.5 minimum.
Thank you.
The performance of the U.S. economy over the past year has really been quite strong. We had growth of more than 3% last year, as rebounding supply supported both robust growth and in spending and also employment, alongside a considerable decline in inflation. The more recent data show solid growth and continued strength in the labor market, but also a lack of further progress so far this year on returning to our 2% inflation goal. So I'll say a little bit about our 2 mandate goals, maximum employment and price stability. As I mentioned, the labor market remains very strong. Payroll job gains have been strong over the first quarter, averaging just a tick above 275,000 per month. The unemployment rate has been below 4% for 26 consecutive months, which hasn't happened in more than a half a century, the longest streak of its kind. Strong demand for workers has been met by a substantial increase in the workforce due both to rising labor force participation and a substantial increase in immigration, as indeed Canada has experienced as well. So even with this strength, by many measures, our labor market has been moving into better balance over the past year. The ratio of job openings to unemployed workers was extremely elevated in 2021 and 22, has now moved back down to levels just above the pre-pandemic era. Surveys of workers and businesses indicate a normalizing labor market. So do the rates of both quits and hires. And broader wage pressures also continue to moderate, albeit gradually. So the overall picture for the labor market is one of real strength, but gradual normalization. Turning to price stability. Our inflation mandate. Inflation, of course, declined quite significantly over the second half of last year, over the whole year, but particularly in the second half. But 12-month core PCE inflation, which is one of the most important things we look at, is estimated to have been little changed in March over February at 2.8%, and the 3- and 6-month measures of inflation are actually above that level. So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2%. before it would be appropriate to ease policy. We took that cautious approach and sought that greater confidence so as not to overreact to the string of low inflation readings that we had in the second half of last year. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence. That said, we think policy is well positioned to handle the risks that we face. If higher inflation does persist, we can maintain the current level of restriction for as long as needed. At the same time, we have significant space to ease should the labor market unexpectedly weaken. Right now, given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and the evolving outlook guide us.
Alrighty, I apologize for putting everyone to sleep with 3 minutes of Jerome Powell. Yes, I know it can be very boring. However, there are some very important tidbits of information here. Notably at the end, his statement there, which is that he's pretty much saying we can stay at this level of interest rate for as long as we need. And if we need to, we can drop it for the purpose of fighting unemployment. Not just inflation, fighting unemployment. So he did previously call out that they had 26 months of unemployment under 4%. Yeah, that would be February of 2022, aka pretty much the end of COVID times and getting back to some sense of regularity after effectively 2 years of government forced shutdowns. So, does it make sense? Is it true? Yes. However, at the same time, understand the context surrounding it. But the major point here is that inflation has not gotten better. They're still hammering the point of they want 2% inflation. And they're not going to change anything until the data starts to show that either unemployment is becoming rampant or they're actually going towards their goals, which leads over to, I know, more screen shares. One more. The change in the probabilities for the Fed rates. So if you go over to CME Group FedWatch tool, they have a historical track of what the probability is based on the interest rate changes. So this is for the May meeting. You'll notice that this gray portion, whatever area is largest, is the most probable outcome. So this one is actually no change. We've been bouncing around, but as we get closer to the date, it's gotten less and less likely. So let's go ahead and look over to June. You've probably noticed that this is the one I've talked about in the past, which is we had this large red area section in here. This is that time where the market was trying to say that it is most likely we will get one rate drop. You'll see over here, April 9th, that's when we had our CPI report, and then our Jerome Powell statement came out a few days ago. So since then, this sentiment has absolutely gone by the wayside, which means that no rate cut for June, no rate cut for July, and only when you get to the September meeting does one rate cut become the most probable outcome. So this is a bit of a change, because even if you look at this back before our CPI numbers, we were looking at 2 rate cuts for the September meeting and even possibly for the July meeting as well, before we had this giant spike here where the sentiment absolutely dried up and the rest of the market is kind of wisening up to the idea of 1 to 0 rate cuts for the rest of the year. So there you go, from Jerome Powell's mouth himself, who I will say, for as much flack as we give government bureaucrats on this show, he is one of the straightest shooters you can possibly expect for a person in his position. So I'll tip the hat to him on that one. He's at least a pretty honorable guy when it comes to that.
So when you
go ahead, Nate.
Okay, so when you're looking at a lot of the different charts, using past indicators to try and predict the future, right? As far as crypto goes, we are due for like some sort of crash, most likely right around like September or October. And then of course, after the halving, then we got like 3 months, maybe just 2 months of either downwards or sideways action. So with everything that's happening right now, I could see the pauses, right? The continual pauses being for sideways action, and then Bitcoin ETFs around the world for slightly upwards action on Bitcoin for the next few months. But if we don't cut at all, I don't really know where we are going to have some sort of crash, especially if we start getting involved in wars, presidential election, all that stuff, which is usually indicators of bullishness, which tends to make prices rise. So especially, when the money printer starts really printing, hence war and presidential election. So what is it left that we've got possibly that could, other than like a black swan event, that could drop the market?
Well, that's pretty much it, because so price stability and labor participation are fundamental goals. And, when this whole concept when this whole rate hike situation began in 2022, their goal was to bring inflation back down to the 2% level because it had grown astronomically due to the COVID printing and all that stuff. And this is where, look, I'm going to make this statement. Before I make this statement, I want to preface this by saying I wouldn't want to be in Jerome Powell's shoes. I wouldn't want to be in any Fed chair shoes at all. This is, I'm sure it's nothing but a stressful position. And I'm sure that especially in a presidential year, he's getting a lot of pressure, from outside forces that he wouldn't normally receive if it wasn't an election year. So, but I do feel like there's a little bit of gaslighting going on here, for this case in point. So the talking point has been, the goal has always been to get him returning back to 2%. All right, you raise inflation, you raise interest rates to slow the economic engine. All right, and then in the hopes of a soft landing where that doesn't take that much of an impact on the labor market. All right, but then you have Jerome Powell making statements like unexpected labor softening, or if we take an unexpected hit to the labor market. Well, if we're in a situation right now where inflation isn't being, if inflation is still being sticky and it's still very stubborn, it's not getting to the goal that's, where it's supposed to get to. The only way for it to get to that goal is if the labor market begins to decrease. So there has to be a growth in unemployment in order for that number to get back down to 2%. Otherwise, as long as the labor market continues to stay strong, then we are going to maintain these interest rates through millennia. And it will only change when the labor market begins to soften and the unemployment number begins to rise. Because when that happens, that's when you can start to lower the interest rates and you can start to get back into the grind of things. The last thing you want to happen, though, is for interest rates to maintain or continue to go up and inflation does the same thing. That's when you get into a period of stagflation that the United States saw in the 1970s. All right. And then, the last phase that we would hopefully never see is a depression where, okay, rates are staying the same, rates are increasing, nothing's happening. So we're going to drop them down to zero. And then that still doesn't affect anything. So I think there's a little bit of gaslighting going on here, but I think that's built into the politics of it all. I wish he wouldn't use terms such as unexpected labor softening or an unexpected hit in the labor market when, realistically, if you want inflation to come down, there has to be a rise in unemployment to get that balance. That has to be the case. Z, Brendan, Will, you guys got anything?
I was just gonna say that everyone's always casting spells. Everyone's always trying to hypnotize the audience. Everyone's got like a sales pitch that they got to make, and so that's all that I had on that. Is it's unsurprising. You just have to be able to. You have to be wise enough to be able to see through this stuff, and just like Josh was saying, like recognize that it's gaslighting. Recognize that he's got something he's trying to sell you. Everyone's got something they're trying to sell you. Me talking to you guys at home right now, I'm trying to sell you the concept of you need to fucking understand that people are trying to sell you things. So, Brendan, go ahead.
Yeah, I was just going to say, Josh, essentially what you said is very accurate. And look, we don't know what Powell's move is going to be. And I wouldn't want to be in his shoes either. But he's said previously, just as you alluded to, that historically, he's saying not this time, but historically, us to be able to reduce interest rates back down, inflation rates back down to 2%, has always come in line with a rise in unemployment. There has never been a time where we've been able to get inflation down to 2% without affecting the job market, because they're so intertwined with each other. A strong labor market pushes so much upward inflationary pressure that it's hard to get that back down below 3%, back down to that closer to 2% range. And I just want to shout out, as much as I've, kind of given Powell, I give him so much crap in 2021 and into 2022 when he talked about transitory inflation, when he talked about, hey, this is gonna subside by itself. Essentially, what he was saying, that was July. My memory serves me correctly. July 2021. They didn't have the first rate cut until March 2022. So he was expecting from July all the way to March, him and his team, that we were going to inflation was going to stop increasing. It was going to just automatically start going down by itself. So he went July, August, September, October, November, January, February, March. He went 7 months before he was like, oh shit, we might have made a mistake. And why do you think that we're going through what we're going through now? Part of it is because the policy didn't take place fast enough to be able to curb inflation when it really needed to happen. And then as it starts, we talk about inertia, right? We talked about that in the crypto markets. It's the same thing in these markets. As that inflationary pressures continue to rise, and you don't nip it in the butt, it's much more difficult to get it under control. And the Fed, I hate to say it, only has limited tools to get it under control. The federal government, as they print money, also creates inflationary pressures. So between the job market and the tons of money that the U.S. government is printing, is just continuing to provide a lot of inflationary pressures. Yeah, I know you wanted to say something, and I didn't mean to talk that long, but yeah, go ahead.
You're good. I was going to say, you're entirely. What's up?
Can I just make a statement real quick and then kick it over to you? I don't want to drop this. We were trending in the right direction. We were trending that way up until probably 3 or 4 months ago. We were trending towards a soft landing. So I don't want to sit here and say that Jay Powell has been gaslighting the whole time or anything like that. We were trending in the correct direction, but that direction has since pivoted. All right. So I think the gaslighting has become very recent, and I would like to see a little bit more honesty, and I would like to see the gaslighting to stop, because, if inflation is starting to increase again after, the progress that we were seeing, then, you have to be able to be honest about that. But again, we're in the middle of an election year, so I anticipate the gaslighting to continue. But go ahead, Z.
No, you guys have great points. Josh, to just double tap what you just said, Mrs. Producer, if you don't mind pulling up the graphic I have for you. This is the year-over-year inflation chart. And as Josh was talking about, it looked like we were trending in a correct direction. I mean, granted, when you come down from 9% inflation over year, anything lower than that is a good direction. But then we kind of had almost this triple bottom thing. And I'm sure if we had the Professor STP, Mr. Know-It-All himself on here, he'd be like, oh yeah, look at that, triple bottom. This is a good buying signal, aka it's going up. But yeah, we're sitting at about 3.5% right now. And then to Brandon's point earlier, the Fed truly does have limited options. And by limited options, I mean literally 2. They can control their treasuries holdings, or they can adjust interest rates. That's it. Other than that, it's just Jerome Powell yelling at lawmakers to stop spending as much money and trying to encourage people to keep growing their businesses. The reason that I just wanted to add a little context for the folks at home, the reason that we keep talking about these numbers and why 2% is important is because the general economic philosophy on this is that 2% inflation is 1% below 3%, which is what they aspire the national GDP to increase by every year. The goal is that some inflation is okay, assuming that we keep outgrowing it. What that means is that, yes, your money technically is getting devalued over time. However, because we are able to produce more goods, services, or through innovation and entrepreneurial effort, we are able to expand the amount that we produce and service to the world every year. We've unfortunately gotten to the point where we're at 3.5% year-over-year inflation, And according to Jerome Powell's own numbers from the last FOMC meeting, GDP came in at 3.2% for the quarter and 3.1% annually. And on top of that, they had an anticipated growth projected of 2.1%. What that means now is that your original goal and philosophy has inverted, which is that by the numbers, when everything is contextualized, the economy is actually kind of shrinking. And that is not what you want, because you want it to only be going up. So when we have 3.5% inflation and a projected 2.1% GDP growth, that means that we are not doing well.
Yeah.
The reason for the GDP.
Go ahead, Nate.
Oh, I just wanted to make a quick statement. The reason for the GDP growth is simply shrinking is because of the population shrinking.
And conversely, one can hope that if you continue having more children, theoretically GDP should go up. I mean, this is all theoretical and assuming solid state, which is that nothing ever changes. However, as we know, things do change, but realistically, you can kind of approach things from like a snapshot perspective, which is take it 1 month at a time, look at the very small incremental growth. You're not trying to do the calculus of factoring in the gravitational pull of all the planets to figure out how fast we're going to go around the sun. It's just small scale.
And then one last quick statement. So when population starts shrinking and GDP starts shrinking, how do you get those individuals, the population growth, back up? Well, you make little things called AI robots to do all the work for you. And that is something that I talked about on my channel, which is the Ascending Man over here. You can go ahead and look that up and you can get some details into it. But that's as far as I'm going to go with that, because I could do this for a while.
Yeah. So one of the things is, hey, could AI allow us to be more productive and increase our GDP rather than having more kids? But outside of AI and outside of people coming into our country from other countries, right? Immigration, we need about 2.2 people per family, 2.2 children per family to continue our increase of GDP. And we're not hitting that right now, not even close. So we need other ways to back end of that, right? One of them is immigration, one of them is AI, or some other way that allows us to be more productive as a country. Let's not forget with this whole inflation thing that, hey, SJ, welcome. Great to see you. Boogie, I saw you in there as well. OG, Hexagon Lost in Asia. A whole bunch of people I didn't get to shout out just because we've just been rolling here to try to get through all of our topics. But great to see all of you. Thank you all for joining. But let's not forget, in September or October, I forget which month, they changed how they calculate medical inflation. Medical inflation was going to go up a lot, like multiple percentage points. And so our inflation would have looked like it went up like 5%, right? It wouldn't have looked like it was staying that stagnant 3%. So I feel like they've made some changes to try to make it look like it's better than maybe it is, at least from past parameters. And so those are some things that you need to also keep in mind, that the numbers that they're feeding us may or may not be accurate. I don't know. I'm not saying yes or no. I'm just saying, like, you need to take everything into consideration and look at the whole picture and what that paints for our future and for, these interest rates. Anything else?
Either way, yeah, it might be a good time. Maybe volunteer for another project at work, or volunteer for a little bit of overtime. Make yourself seem useful, because layoffs might start coming. So
you don't need both your kidneys either. So there's that. Sorry.
Yeah, it's also another. And Josh, you're right, and it's also another potential of being like safe. If you put 100% of your money into markets that you can't sell for a year, be careful. You have to have a little bit of a safety net, and that is important in all aspects of your life. So don't degen too hard, I guess, is what I'm trying to say. But yeah, pick up some money, stack some savings, and you don't know what's going to happen. I feel like I have a pretty safe job, and I could get another job if I wanted. But that's what everyone has always said when markets start, or when unemployment starts to rise, when we start to see potential issues or kinks in our armor of our economy. And so just don't think that you're safe. Always be safe. Take a safe approach is what I'm trying to say. So good point, Josh. Moonmont, welcome. Thank you. I appreciate it. I hope everybody is enjoying it. Honestly, we really enjoyed this show tonight. It was a great time. I'm just still stoked that we have 1,000 people, 1,000 subscribers. We are growing in our Telegram chat. And by the way, our Telegram chat is I keep saying it's not going to be free. It's not always going to be free. But you might be grandfathered in if you're part of our Telegram chat, at least to be able to be in there without paying. But you won't be able to get in for free for much longer. So hit that QR code, join our Telegram. This alpha that we're showing on a Sunday night, we talk about all week. We're giving you this information. Sometimes it's emergency streams. Sometimes it's just a little bit of news. Sometimes it's a way that we look at a market in a different way. And there's a lot of smart people outside of just the DGen Roundtable guys and gals. We have a great community that we've built in a lot of awesome ways to answer questions, to help people not get wrecked. We've had multiple saves recently. And Crypto Chronic, shout out. Thank you. Welcome. And honestly, I just think that we have such potential to grow as a community and grow together through the rest of this bull market. So I'm really excited to see where we're going to go. I hope that Zenith doesn't just put all of his money into buying cats. And you think that that's going to be a good store of value, but that cat on his lap is very cute. So Zenith, tell the people what's going on, who your cat is, and where they can find you before we close out.
This is not even my cat. This is my roommate's cat, and I have to keep Lily entertained, or she will destroy my microphones and my green screen. She's done it on stream before. Anyways, final note for me is that, was this a Bitcoin show? Yes. Are we Bitcoin maxis? Absolutely not. We are very much making our plays in other areas because we see more growth in those areas. However, Bitcoin is very important to this space because Bitcoin moves first and it moves the rest of the markets. Shout out to Richard Hart and Hart's Law, which is effectively just liquidity. The way that we have liquidity pools set up in the market in general is that a lot of things are tied together. They have the ability to operate somewhat independently. However, generally, whichever way Bitcoin goes, the rest of the market follows. So understand this foundational principle and this foundational token, and it's going to help you out with a lot of your other speculation or analysis if you're more into that instead of just blind guessing on meme coins, which, I mean, can be fun, but at the same time, we're here for gains, not just laughs. Alrighty, you folks can find me at home at Zenith DI on Twitter, or you can find the Hexago Space Force Twitter, where I try to meme at Peter Schiff and make him feel bad for not getting invited to our parties. That is what I got. Passing it over to Nate.
Damn it, man. That's hilarious as all hell. Oh, yeah. I am Nate McGinnis, the Ascending Man. And yes, I do got my own YouTube channel. As soon as I'm able to get back to it, I will. It's been incredibly, what's funny is that my work has been just like nonstop, overtime, trying to thread the needle as much as possible, doing DGen Roundtable as well as my work. But hey, I mean, that means more money I can throw at the market, right? So I'll definitely be doing that for a little while for sure. But yes, you can go ahead and find me at the DGen Roundtable Telegram link. I actually do have my own link tree that is right in the comments right here, right now. You go ahead, reach out to me there. If you are worried about where you're at right now as far as your portfolio, what coins to get into and able to catch these dips really well, because I've got some alpha on some really nice ones. And then make as many gains as possible for the upcoming, let's just say, a rocket launch that we're going to have here soon enough, right? Go ahead, hit me up. You can go ahead. I got consultations open, only one per day, maybe two, possibly. It all kind of depends on if I have time, quite frankly. But yeah, just hit me up there. I'm always on Telegram. Otherwise, Will, what is going on, sir?
Well, I'll tell you what's going on, broskies. During this stream, we have organized a meetup that's going to be happening over in Springfield, Missouri. So for all the Hexicans that are in the area, I'm going to go ahead and I've already dropped the link in the chat, but I'm going to go ahead and drop it again on in there. T.me/hex_meetup is the general Telegram. And then under there, you find the Missouri chat, the Missouri topic. And then inside there, the first pinned message is this meetup that's going on. So big shout out to Paul Sachs for organizing it. He knows a lot of the Hexicans that are already in the area. They've already done a whole bunch of meetups. So I'm just swinging by. And I guess it's cool enough that we're organizing a neat little meetup. So I'm super stoked. It's going to be happening next Saturday. More details to follow in that room. If you guys want to meet up with other Hexicans, then I highly suggest you join the Hex_meetup Telegram chat. Again, the link is t.me/hex_meetup. Hell yeah, Crypto Chronic. Grab that consult with Nate. I'm glad to hear. Nate, I'm so glad to hear that these consults are fucking kicking ass and taking names. Good shit to you, sir. For the folks at
Definitely
home
been
who
helping
want
a
to,
lot of people, that's for sure.
yes, absolutely. I'd love to hear it. I love to hear that the world is becoming a better place because we are doing the things that we love to do. For the folks at home that want to find me, you guys can find me in the DGen Roundtable chat following this QR code link that's down there, or you can follow the bit.ly/degenerate_roundtable. Or if you want to follow my personal socials, everything can be found at linktree/Will Stevenson. Again, that is linktree/Will Stevenson. Also, you can dial 1-800-JG Wentworth 877 cash now, or whatever the heck that little jingle is. And I won't answer the phone, but I'm sure that somebody will, and they'll help you out. Josh, where can the folks find you, and what you got going on in the near future, broski?
Yeah, so my name is Josh. A little exciting news. I just launched a brand new website for myself. So yeah, I'll give you guys a second to grab a pen and paper. I couldn't type it in the chat. But if you guys go to www.idon'tgiveafuck.com, I'm just kidding. I didn't launch a website at all. You guys can find me on Instagram, on Twitter.
Damn it, I was looking it up, man. I was hoping. I'm going to go look that up and see if someone actually did that. I want to know if someone actually did that now.
You guys can find me on Instagram, on Twitter at Chocolate Taints. You guys can send me DMs and all that stuff there. I'm also in the DGen Roundtable Telegram. If you guys want to throw a comment to me or send me a DM, you guys can do that. Make sure you guys tag me. 5 things look forward to that I'm doing this week. All right. Steak, ground beef, running, lifting, and working. Getting on my grind this week. So I'm enjoying having a little bit thinner face here on camera. Hopefully that it's going to shrink down a little bit more. But that's all I got. Brendan, what's up, man?
Well, I just want to say that surround yourself with people that make you a better person, right? That challenge you to be a better person. We not me, but a lot of people in our DGen Roundtable have created an accountability chat. So a bunch of people are pushing each other to work out more, to eat healthier, and to hit macros so that they can, body, mind, spirit, money, right? Money isn't going to make you happy if everything else isn't in place to be able to enjoy that. So I'm going to continue to say that until we hit the top of the bull market, because you don't have much longer to start getting your life in order, start getting your stuff settled. But yeah, honestly, great stream. You guys had just killed it. Ton of great information. We will be launching a website for the DGen Roundtable soon. We have a lot of good news coming up here in the near future about DGen Roundtable. And honestly, I think this was a great show. And as Zenith said, we're not Bitcoin maxis, but I will just add to one thing that he said: Bitcoin is the first mover. So we always need to pay attention to Bitcoin and Ethereum, even if Dogma Fat can go up 80,000x at a random time. That's not the norm. And most people are just going to lose millions of pulse or millions of coins trying to chase every meme coin. So it's okay. I think you should have some meme coins. I think it's all right to have a small percentage of your portfolio in meme coins. In fact, I do. But your big bags need to be packed with your main core coins. So DGen responsibly out there. Definitely check me out at anonymous_bean on Twitter, as we'll just put in the chat. And anything that people need, let me know. I'm down in Miami, so if you are coming through, I've met up with a few people as they come down. I don't know. We're trying to figure out a meetup for the DGen Roundtable. I don't know if we're going to come to New York and cover the Richard Hart trial on October 24th. We're throwing that around. We might be there and doing some live shows. I don't know. So keep an eye out. We got a lot coming. I don't know what's going on over here. Watches. Are we showing off watches? I don't exactly know.
Fist bumping, bro.
Okay. They're fist bumping. Yes.
I didn't even know what was going on. I was just hearing fist bump. I'm like, wait, what? I look in the private
chat. I can't reach you, Brendan, but hang on. This is a fist bump you through Nate's head.
All right, got it. Okay, fist bumps, elbow bumps. I get it. But yeah, so it'd be really cool. I know a bunch of people in the Richard Hart ecosystem are planning to go support him at court. I think I saw like 120 people signed up as potential yeses on Pulse Tour. What's the website? throw that out?
It is.
PulseChainTour.com. It is a
Thank-
tentative event on their schedule right now, but they do have an RSVP button. By the way, if you want updates on all this stuff, go follow Nuclear Herbs on Twitter. He is our Pulse Chain lawyer and all-around great dude. He and his wife are fantastic and big supporters of the Pulse Chain Tour, but also he has some personal stuff going on and could use some love from the community. So go follow him on there for updates and show him some love. The last thing he posted was some really inside information, which was currently the courtroom that is booked for that hearing holds about 50 to 75 people. Also, if you want to be part of that crowd, you have to unfortunately turn over your electronics to the government for the time being to be allowed into that courtroom. However, other than that, if we do get a lot of people interested and a lot of people confirmed, if we have enough time in advance, we can actually request that it gets changed to a larger venue to accommodate everybody. It would be super cool to pack that place. And at the same time, if we need a bigger venue, we can always ask for one.
Yeah, wouldn't it be crazy if we had hundreds of people? Now, great. No, look, we can't just be like cheering for Richard Hart. This is you'll get thrown out or held in contempt, which could be bad for Richard Hart. Like, we need to go and support, but we need to do it the right way. And that means being very respectful within the courtroom. So
yeah, Brennan is entirely correct. This is very much a sit and watch suit and tie event. As much as we all hate all of those things, for this one thing, if you want to show the support, put on the suit of armor, wear the necktie, aka the chain of slavery to corporate conglomerations. But yeah, if there's a time to do it, Argo, it's this time. And yeah, October, New York City is the leading option right now. So booking around that one for at least until we get a better option.
Yeah, it's exciting. Anyway, we're past time. It's been great. Honestly, it was a really great show. It's not often that we talk about Bitcoin for a full show without getting into other things, but without even TA, we literally just had great information. So, Nate,
if I could, just one thing too for everybody listening.
Nate.
Yes, this may have been a Bitcoin show, but it's really important because what happens to Bitcoin then moves over into Ethereum. And if Ethereum starts going wild, that goes directly into Pulse. And Pulse is going to go up with Ethereum. I want you guys to think about that. All right. So
thank you. I believe that's what Zenith was referring to as well. But yes, so thank you all. I hope everybody has a great night. We'll be back here on Wednesday for another great stream, either a guest or Whiskey Wednesday. But either way, we can't do this without your support. So join our Telegram, hit that like, smash that subscribe. DGen responsibly. We are out. Good night.